Hi everyone, you're all very welcome to this InterTradeIreland All-Ireland Innovation Programme event for SMEs. My name is Dr. Majella Giblin and I'm very pleased to introduce you today to Professor Alan Ahearne, who's a colleague of mine at NUI Galway. Alan is Director of the Whitaker Institute and he's also a Professor of Economics. He served as a Special Economic Advisor to the Minister for Finance from 2009 to 2011, when Ireland was navigating through the global financial crisis. And just very recently, in July, he was appointed an Economic Advisor to the Irish Government once again, and this time, of course, it's to navigate our way through the economic crisis caused by the pandemic. Alan has also been an advisor to the IMF, and he's chair of the Central Bank of Ireland's Risk Committee. So I'm very delighted to hand you over to Alan now to talk about SMEs and then finding their way through the crisis.
This is a very difficult and challenging time for a lot of small and medium-sized enterprises in the Republic of Ireland and in Northern Ireland. These businesses have been hit for the second time in a decade with a really extraordinarily deep recession. And one of the questions that arises is how the current recession caused by the Covid-19 pandemic, how that compares with the recession we had 10 years ago, which was caused by the global financial crisis, where the global financial system almost imploded and the global economy went into a very deep recession. There are certainly similarities, there's no doubt about that. We see that in the big increases in unemployment that we experienced 10 years ago, and we've experienced over the last few months. A lot of jobs have been lost, some hopefully only temporarily, and a lot of businesses are under financial strain, particularly a lot of small and medium-sized enterprises. But in many ways, it's very different from the last economic crisis. 10 years ago, the worst hit sectors were the financial sector and the construction sector. We saw basically construction activity cease and a lot of construction companies go bankrupt. But in this downturn, the worst affected sectors are business in consumer-facing sectors of the economy. So in tourism and hospitality and leisure, personal services, and in some retail. And these are sectors that are dominated by SMEs and micro businesses. One of the other differences that we're seeing from 10 years ago is that governments are responding differently, and they can respond differently. 10 years ago, because there were large parts of the economy that had been relying on credit growth, and that credit growth was disappearing as the global financial shock hit. Large parts of the economic activity just disappeared and evaporated and was never going to come back. It was all credit driven. And so there were permanent shocks to the economy and therefore permanent shocks to governments' finances. And so governments had to try to plug holes in their budgets by raising taxes and cutting spending. And that, of course, added to the economic downturn in Ireland, in the UK, and in other places. Whereas in the current crisis, because of what's hopefully a more temporary nature of the crisis, then the governments have more room to be able to borrow in the near term and support the economy and not have to resort to higher taxes and expenditure cuts. And that's what governments have been doing, the Irish government, the UK, and all around the world. They have decided to borrow large amounts of money to support workers' income and to support businesses and to support the economy in the knowledge that this will hopefully be temporary. And therefore, when the economy starts to recover, the budget position of the governments will start to recover, and therefore they'll be able to serve any extra borrowing that they're taking. That's a really crucial difference. So we have a very different approach by governments. And a part of what allows them to do that is that borrowing costs are so low at the moment for governments, in large part because central banks are doing a lot of work around the world in supporting cheap borrowing rates for governments. So in Europe, the ECB is buying a lot of bonds and therefore making borrowing costs extremely low for governments. And in the UK, the Bank of England is doing something similar. So governments have a lot of room to be able to borrow a lot of money, and they're borrowing at very cheap interest rates, and therefore they have a lot of room to support the economy. And we're seeing that for employees and for businesses. We're seeing, for example, governments with temporary wage schemes. That's true in the Republic of Ireland and in Northern Ireland. Those schemes have been very important in that they have allowed the businesses to keep their employees. In some cases, the employees are furloughed, but at least they remain connected to the businesses, and they're not laid off. And that's been a very important way of supporting workers and supporting businesses. That sort of a response, I think, makes a lot of sense, where you have a shock that's temporary and that affects certain sectors disproportionately badly, as I have mentioned earlier. The other types of big policy responses is because SMEs, many of them who are badly affected, have found that they're running out of cash. It's been very important for them to have access to cash. And that has come in many countries through government guaranteed loan schemes, where the small businesses are able to borrow money from banks, but in turn, what incentivizes the banks to make those loans is that the loans are guaranteed by governments. And why that's so important is that we know that in downturns, in other recessions, businesses need cash, but banks can become very reluctant to lend to these businesses because they become worried about the creditworthiness of these small and medium-sized enterprises, because they recognize that there's a deep recession and that these small businesses are now risky businesses, and therefore the banks would be reluctant to make loans to them. And of course, this is exactly the time where you want banks to make loans to businesses, because there are many viable businesses who have cash flow problems, but their medium-term prospects are bright. They just need cash to get over the next few months and few quarters and beyond that. And therefore, the banking system has a role to play, a very important role to play, and it's through government support for loan schemes that can incentivize and entice banks to make those loans. I think another really critical element, when we talked about the temporary nature of this recession, everybody's hoping that a vaccine will arrive that will mean that people can be safe in terms of going about their daily lives, and economic activity will therefore return to normal. But I think it's reasonable to believe that there will be scarring effects from the downturn, in that there will be changes to behavior, consumer behavior, household behavior, business behavior, and elsewhere, that will be more permanent after the crisis has fully lifted. And even after all the containment measures have all been fully lifted, whenever that will be, I think it's still reasonable to expect that the world will not be exactly as it was in January and February of 2020, that there will be changes. And I think that'll be important for small and medium-sized enterprises and business in thinking about what the new world will be, the new normal will be. And in that sense, one of the key things about small businesses and downturns is that the key ingredient for surviving and the downturn and then prospering in the recovery is agility and adaptability. And I guess small and medium-sized enterprises often have the advantage in that they are small, and therefore they can turn on a dime. And it's that ability to be agile that's really going to be at a premium in the current crisis. When thinking about the recovery and what opportunities there might be, the first thing to be cognizant of is that most economic forecasters are expecting the global economy to recover next year in 2021. Now, everybody acknowledges there's incredible uncertainty about the the future path of the pandemic, and therefore the future path of the global economy. But assuming that containment measures continue to be lifted, most economists are optimistic that we can get a recovery, at least some sort of recovery next year. That wasn't true if you go back 10 years ago. Remember, the global financial crisis started in 2008, and it really, in Europe, it really didn't get resolved until 2013. It went on for 5, 6 years. I think nobody's expecting that to happen this time. And I think, therefore, one can be cautiously optimistic. Again, conditional on the path of the virus and the public health crisis, that we can see a much more rapid rebound in the global economy, and therefore in the economy in the Republic and in Northern Ireland. Another key thing to think about the recovery and opportunities for small businesses is that I talked earlier about the government offering lots of support to workers who were laid off or furloughed. And also, of course, there were lots of businesses who didn't close down. A lot of employees didn't lose wages. But it was very difficult to spend money during the lockdown. And therefore, households have accumulated large amount of savings. And looking at the forecasts for the Republic of Ireland for next year, for example, it's forecast that there'll be an extra 10 billion of household savings. And what's happened is that people's, yes, overall income has fallen, but people's spending has fallen even more because people just couldn't get out to spend. And so it will be crucial to think about what will happen to those savings, and can small and medium-sized enterprises, can they tap into those savings? So there will be money there, and that money can be a stimulus. And I think businesses can therefore think optimistically about how they can get households to loosen the purse strings, of course, and spend some of that extra money that they have. And that money is accumulating in bank accounts, but people will have it. Now, they'll be reluctant to spend it because the future is very uncertain. But I think it is an opportunity there for businesses if they can tap into that to increase economic activity. I think a lot of talk from governments is that talk about a so-called green recovery. I think that's something that small and medium-sized enterprises can tap into. And what governments mean by that is that in trying to boost the economy, whether it's through big public spending or infrastructure expenditure, they're going to very much have in their mind climate change and having a green recovery. There was a really nice cartoon, I think it was in The Economist magazine, where it showed a small island, people on the island, and there was a big wave, tsunami with COVID coming at them, and they were trying to protect themselves. But then in the distance, there was another tsunami 10 times the size of the COVID tsunami with climate change written on it. And I think that was trying to illustrate that, yes, this has been a dramatic crisis we've had to face, but there is even a much bigger crisis in the distance if we don't do something to transition to a lower carbon economy. And so I think that's the direction of travel for policy about this recovery. And therefore, there should be opportunities for businesses in thinking about how they adapt to link in with the idea that everybody, governments, and I think the public have in mind more now, they are more conscious of the necessity to move to a low carbon economy. I was talking to somebody recently who owns a dry cleaning or laundrette business, and of course they were closed down, they're reopening, but they're going to reopen as a climate friendly or eco friendly dry cleaning business with low carbon technologies and using less chemicals and stuff like that. So they've taken the opportunity of being shut to rebrand themselves and remarket themselves. And I think doing some of that's clever, and I think some of that may mean that more businesses can ride the tailcoats of the so-called green economy. They also, this is more speculative, but I think people may be more conscious now after coming out of the lockdown, more conscious of ever of health and well-being and those type of issues. And so I think, again, to the extent that businesses can link in with that, people will think about the world differently and think about themselves and their families and their health differently, and there may be opportunities there for businesses. And one other opportunity, and I'll finish on this note, just one other general theme, is that one of the things that we learned from the pandemic is that in a globalized world, we're very vulnerable to stuff that happens a long way away. And there may be a shift to what some people are calling so-called deglobalization, in that there may be people may start buying more of their goods locally. We may not have such long supply chain, in the sense that rather than businesses getting their supplies all the way from Asia or from some distant land, they may look for those supplies closer to home, because they have sort of learned a lesson that you don't want to be so reliant on these international supply chains. And therefore, I think that what you may see is more localized supply chains being generated, stuff that we always bought in from abroad. We may not do that anymore. And of course, it links in with the whole idea of Brexit. We're not sure how that's all going to pan out at the end of this year, at the start of next year. But again, it goes to a greater emphasis on stuff being produced locally, and therefore stuff that's more secure for businesses.
Thank you so much, Alan, for those great insights on the opportunities for SMEs really in times of crisis. Both InterTrade Ireland and myself are really appreciative of the time you have taken to share with us your thoughts on this. And thank you all the listeners for joining in today. I hope that you enjoyed the event. Just to remind you that we run a series of online All-Ireland Innovation Programme events, and you can find details of the forthcoming events on your screen now, as well as how to access past events. So thank you all very much again for joining us, and I hope you join us for the next event, and I hope that we get to see you all in person really soon. Thank you very much.